Have you ever witnessed a roller coaster ride in the stock market that leaves you both exhilarated and apprehensive? Well, Tesla, the electric vehicle juggernaut, has been on precisely such a financial thrill ride. Imagine this. Over the past couple of days, Tesla's stock has pulled off a stunning feat, surging by 1.6% for the second consecutive day, translating into an impressive 7% gain in just 2 days. But hold on a minute. Before you start celebrating, it's crucial to rewind a bit. You see, Tesla's recent resurgence comes after a tumultuous period that had investors on edge. The trigger? Lower than expected deliveries for the third quarter of the year and murmurs of uncertainty surrounding the Tesla Model 8. This sudden turn of events left many wondering, is Tesla on a comeback trail, or is this just a fleeting moment of glory in an unpredictable financial landscape? Join us on a journey through the highs and lows of Tesla's recent stock performance as we explore the factors behind this electrifying revival and ponder what lies ahead for the EV giant. Buckle up, it's going to be an intriguing ride. While Tesla remains one of the world's most valued companies, it is not immune to the challenges faced by major automakers worldwide. Persistent supply chain disruptions, a sluggish global economy, intensified competition, and dwindling order backlogs have all taken their toll on Tesla's financial performance, causing fluctuations in its stock value. In the realm of electric vehicles, EVs, Tesla has often been perceived as unrivaled. Yet, doubts have arisen about the company's ability to weather the storms that inevitably beset any industry. Investors and industry watchers alike are now asking whether Tesla's stock price will continue to decline in the future, or if the worst is indeed behind them. The recent dip in Tesla's stock price was partly due to the company's decision to lower the prices of some of its vehicles in China, a significant market for the EV giant. Notably, the prices of Tesla's Model 3 and Model Y automobiles in China were reduced, partially undoing earlier price hikes attributed to rising raw material costs. This move raises concerns about the demand for Tesla vehicles, especially as homegrown competitors like NIO, backed by Warren Buffett, and upstarts like Xpeng and Li Auto pose an increasingly significant threat. However, attributing the demand issue solely to increased competition might be premature. Tesla's decision to lower car prices in the face of rising raw material costs reflects a more nuanced financial strategy. The Chinese economy, still grappling with challenges such as strict CO2 regulations impacting retail sales, further complicates the picture. If anything, Tesla's ability to adjust pricing could indicate prudent financial management rather than a demand crisis. Elon Musk, Tesla's enigmatic CEO, has consistently expressed optimism about the company's future, even in the face of adversity. He foresees a surge in demand for Tesla vehicles in the final quarter of the year and ambitious plans to boost global production significantly in the coming months. Tesla's new manufacturing facilities in Berlin and Austin are poised to drive future production, making Musk's vision of Tesla's expansion closer to reality. Notably, Musk has even hinted at the possibility of Tesla outperforming Saudi Aramco and Apple combined, a statement that underscores his unwavering confidence in the company's potential. While such projections may seem lofty, they reflect Musk's belief in Tesla's ability to thrive in a competitive marketplace. Tesla is also making strides in expanding its production capacity. The company's gigafactories in Berlin and Texas have achieved remarkable feats, pushing the boundaries of electric vehicle manufacturing. These achievements are not fully reflected in Tesla's current stock price, according to some analysts. In a move to boost shareholder value, Tesla is considering a share buyback program that could reach up to $10 billion in 2023. While share buybacks have been a contentious issue in recent times, Tesla's execution of this program could have a positive impact on its stock price, potentially leading to substantial returns for investors. Furthermore, Tesla's robust growth prospects are underpinned by its ambitious targets. The company aims to achieve a 50% annual growth rate, with deliveries projected to increase at a similar pace. Despite concerns about demand, Musk has consistently reaffirmed Tesla's potential for a strong fourth-quarter performance. Stock price roller coaster reminds us of the stock market's natural ups and downs. Short-term fluctuations can be unsettling, but it's vital to keep our gaze on the horizon, where Tesla's long-term prospects and dedication to growth and innovation shine. Tesla's journey is an ongoing adventure, and as it expands globally and pioneers electric vehicle technology, the path forward holds both challenges and thrills for investors and enthusiasts alike. If you found this analysis intriguing, don't forget to like, share, and subscribe for more updates on Tesla's remarkable journey.